So, I'm Tyson Halsey, founder of Income Growth Advisors, and I'm going to talk about the great 2025 blow-off and rotation in the case for gold stocks. And this is near and dear to my heart. And for those of you who know me, this is not new, but for those who don't, experience teaches you some lessons. I had a tech hedge fund in the 1990s, and in 5 months, I was up 112% and got out at the top, and felt like a genius. It was a small hedge fund, but it was 25 million at the peak, so it moved the needle for me. But then in the subsequent years, I kept on wanting to go back to tech. And anybody who studies bubbles or great investors on bubbles, usually once there's a bubble phenomenon, that asset class is dead for a long time. And not only is that true, but that there are then alternatives or new markets, and that's really what the focus of this call is all about. So, hey, Quarry. So here's my greatest concern with regard to the market currently. I like this thing called the Fed or risk premium model. It's very effective in terms of historically timing the stock market. And what it does is it compares the stock market relative to the bond market, the S&P earnings yield to the 10-year treasury yield. And right now, um, it's a sell. Um, and it's a sell because we're almost in negative territory. We were in negative territory. And back in the 2000 peak, the market was it was at a bubble. And for the next 10 years, basically, it didn't go anywhere else. More recently, we've broken the 200-day moving average on the S&P 500, and every major decline is preceded by a break of the 200-day moving average. I wouldn't be surprised if we kind of bounce around. In fact, we're having a recovery already. But I think that, to me, bubbles and parabolic moves are one and the same. It's when everyone gets into this mentality of irrational exuberance. It's my belief, it's rather controversial, but not entirely controversial. It's that we are having a sense that AI is everything. It's that we're having sort of an irrational exuberance, and that's been manifested in the Magnificent Seven or mega cap stocks. And here are two charts from one which compares the 2000 bubble to more currently, and an updated version which shows the Magnificent Seven really having a big parabolic move, and with the enterprise value being 62% of the GDP in the US, which just suggests on a valuation basis things are extreme. Also, in terms of analyzing historic bubbles, you have this cycle of deflationary and inflationary cycles. And in deflationary cycles, typically the S&P and stocks do well, bonds do well. In inflationary cycles, you have things like emerging markets, gold, and oil do well. And it's our view that we are coming out of a deflationary period into an inflationary period. So it is the historic analog following bubbles, which we think we are in now, is that you're going to see gold, energy, and emerging markets do well. A quick look at valuations on a global basis, since I'm talking about emerging markets. The CAPE ratio is the 10-year price earnings multiple. And on Russia, I think it's uninvestable, but I think that if this war gets resolved, it could make for a very appealing place to invest. Argentina has been incredibly successful. Their CAPE is still very, very low. But I think this is where I think you could get some significant moves. Last September, we were very positive on China. Tony, Chang Q were very positive. We caught the move before it really took off because we were cheap at a 14 CAPE. It's attractive. Mitch has made compelling arguments that it's no longer an emerging market, but a significant beneficiary of growth in the global south. The other thing I'd say in that post-bubble period is that you get, again, this performance in the emerging markets in that period from 2000 to 2008. You had significant outperformance, and in Europe and Japan and the UK versus the US MSCI index. And also that happened during a period where you have declining dollar strength. And I think that that's what we're experiencing now or should see going forward. What happened in the 2000s, early 2000s, is China went through the roof. It was brought into the WTO, but that whole market was, I will now. But China went up, the FXI went up sevenfold. Will it go up sevenfold again? I don't know, but it's a very compelling market, but there are some real risks too. So I think looking at some of those other countries is interesting. Sectors that have done well during post-bubble periods is, again, taking a look at the analog of 2002 to 2008. Gold miners and silver miners did exceptionally well, as did energy, materials, mining, utilities, and industrials. Tech did not do well. And that's really what I'm saying is rotating out of tech into new value areas and drilling down a little bit more. The gold continues to break out to a new high. This is not an updated chart, but today I saw is getting close to 3,100. And I think that there is a great opportunity in gold stocks because without a doubt, if you have higher gold prices, your gross margins, your revenues, your earnings, your cash flow, all of those are going to improve. And actually, if you look at the Van Eck Jr. Gold Miner Index, it's down 2/3. So it's well off its highs. And I think that, gold may just be stable, but I think that gold stocks could do well. I think that some of the junior miners would do well. And another argument, this again from some of my friends over at Prescott Capital, is a chart that shows the cash flow relative to the Philly exchange. And basically, cash flows have spiked almost 50%, but that index, the Philadelphia Gold and Silver Exchange universe, has not had a similar move. And it's, I think, due for a move. Lastly, I'd say part of this whole financialization, this bubble, has been a huge decline in interest rates and deflation from 2000 to 2020. And now we've had interest rates back up, and 10-year Treasury yields, I think they're around at 430. I don't think that that's a great bet. I mean, I think I'd rather just stay short. And the fact that you don't have continuing declining interest rates is a bit of a headwind for, long duration assets, which tech stocks definitely fall into. So I had a client, 75, put together a portfolio. And basically, it's an alternative to a 60-40 type alternative. This one has 25% in gold stocks, but we used international bonds and international stocks and closed-end funds. And basically, we came out with about a 7.75% yield. We think this makes a lot of sense, but it's in the areas where we see a lot of potential strength going forward. And I think the unusually high yields really reflect just how cheap the rest of the world is. And it's just to reinforce the point that I think we're in a rotation. This is year-to-date performance on the major indices. You've got the S&P and Dow Jones and NASDAQ all down, along with the Russell growth. But foreign stocks are up 10%. Emerging market stocks are up 5%. Russell value. So just rotating out of everything that worked is the thing to do. And there's a lot of cheap value. I think that one area that I just mentioned is that, these gold miners. And I'm going to now pass on this presentation. Hey, Tony, can you turn off? Mitch, are you there?
Sorry, I was in mood. Let me just flash the documents. It'll be
Okay,
easier.
go ahead. So
I'll
Mitch
just,
Bulajic has been I've known for almost 30 years, and he worked for Elliott Associates and Jefferies, and as a quantitative strategist, and now is doing a lot of work in artificial intelligence. And that's probably a terrible intro. If you'd like to improve on that, go ahead. But I said you got 10 minutes or so to talk about markets as you see them.
can you let me share the screen? It's disabled.
Yes, I'm glad to do that. There you go. I set it up.
Okay. Well, I'm just going to go quickly two things. I'm going to reflect on some of the trades in February, some long-term macro trades that I was suggesting and putting on, even though I'm not a long-term trader, but I found it to be really compelling.
I'm sorry. I'm
Some
looking at the invite to this
Yeah,
event.
I know. Yeah, I'm just talking. Hold on a second. Yeah, that's fine.
Okay,
I'm going
well,
to
I
move my.
wasn't sure
Don't
that
worry, I
that
got
was
it.
me
No,
or
I
you.
got it. I'm just talking now. So I'm just going to reflect a little bit on that, and then I'm going to take you a little journey the way I was looking in the last few days. Top-down approach that I had, trying to find interesting spots down from macro to details, and no specific recommendations, but definitely some interesting things that I'm looking at right now. So let me just start quickly with a reflection of the past trades. So basically, if you were in a call, the first trade I was pretty much going long Hong Kong as the best prosperous market in Asia versus probably in my view the most overblown and worst market in Europe, which is Germany. I'm not going to get into details. I did that before. Now, Germany went up a lot. You know, they got all the limelight, blah, 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 but no one's really talking about Hong Kong that actually outperformed since last month Germany by 2.5%. My other trade was is just a reversal of valuation trades, yen versus the Japanese stock market, which is pretty much at the flat level right now. And of course, the biggest trade success is long Chinese tech KWEB versus QQQ, which is 16% in 1 month. So all these trades are long term. I wouldn't touch them right now. In fact, the Hong Kong versus Germany trade, I would double on that because I'm actually very excited that a lot of this mindless rotation went into Germany, a perfect opportunity to keep on shorting it. Okay, that's one thing. So let me just go. There's like three things I want to just discuss, like what I'm looking at. Again, not specific recommendations. Um, my first premise that I was looking at, uh, why inflation can be good sometimes in the US stock market. And the other one is actually, let me start with this one. Sorry, there's three themes I just want to discuss quickly. Why European yields could collapse. I'm not looking at specific trade. I think all the macroeconomic and geopolitical situations in Europe are really reflecting that the yields will collapse throughout the yield curve in Europe. So my idea, besides putting just quickly reasoning over that, was what is the effect really? I'm looking for the US dollar because there's a lot of talk about dollar collapsing and dollar this, dollar that. I'm not so sure about that. And probably the who's least convinced that the dollar is going away would be the financial officials of the BRICS themselves, who are the culprits. And everyone's saying they're saying the dollar is going. Absolutely not. If you understand the euro dollar market and the whole financial structure on this planet, there's no way dollar's going away. It's very undervalued. And I'm just think this could be the catalyst of falling yields in Europe to really boost dollar, not to mention flight to safety, because we have so many things that can go wrong from Ukraine to Middle East and whatnot. So this for me was a compelling case to say definitely, not just maybe, but definitely, in my view, this dollar collapse theory in the next 3 months to a year, I'm not talking long term here, for me, it doesn't make absolutely any sense. Um, Again, this is a dollar effect, dollar trade, any assets related to dollar, keep this in mind. understanding the dollar is half of the trade. How it impacts the yields, I'm not sure. I'm just guessing that the yield spread is just going to grow. It can narrow, it can just grow. So there's maybe opportunities there. Now, second thing I would like to focus on, since I have 10 minutes, I'm just flowing through this, but if everyone wants these
that's good.
documents, Tyson can send.
Can you increase the size of that?
Yes, sure, absolutely. This is just final thoughts and summary of the theory. But, again, for me, this is all related. I'm not looking at trading European leads. I'm just trying to find a confirmation for the dollar and how will that have the impact. And of course, there's other factors as well, that the Trump tariffs and whatnot. But I'm really surprised that this whole demise of the dollar theory is really like making across the media. My second premise is basically, and just like I was a believer in gold, I'm a big believer in inflation. I think inflation is going to be very hard to tame. Maybe Europeans won't have it, but for the bad reasons, because their economy is collapsing. But generally, if you look historically, inflation has been very friendly to a lot of sectors in the US markets. So generally, inflation is friendly. It's not a negative thing unless we have surge in inflation, which I don't think is the case. But at the same time, I don't think that we will have lower inflation than where we now, only higher, which means there's a lot of sectors that can actually benefit in this. So my idea was looking at inflation. Okay, that's the first condition that I have. Second condition I have, so putting the growth factor. Of course, you need to have sectors that are inflation proof, but they have to have the growth factor. So this is just a little exercise I'm doing, trying to find, okay, let's look at some inflation sectors, industry stocks that will have at least some kind of growth, maybe aggressive growth, but general will be very good defensive, if not offensive, plays in the market. So I just defined these two lists with like inflation resistant, growth driven, typical industries. And also I broke it down a lot by the dividend yield, volatility, and valuation. The third last thing I want to cover, again, I'm just saying this is my journey top down, and I'm just throwing some interesting ideas. These are not trade ideas, but for me, I'll be looking to create trade ideas because I overlay them with a lot of derivatives and options and short-term trading as well. So one of the things that one of the beneficiaries of the inflation versus growth sectors or industries that I follow very closely is industrial automation and smart manufacturing. The reason I go through this exercise is I'm looking, okay, this is my theory. If inflation is sticking around, whether we have stagflation or inflation with somewhat weak growth, that's still good enough for some sector stocks and industries to do well. Now, the reason I'm focusing a lot on the industrial automation and smart manufacturing, because there's another part here, and that's the AI. So, and regardless, even if the inflation story doesn't stand, the growth story, in my view, is very undervalued here because in generally, the Wall Street analysts are still very ignorant and bad about understanding AI. And more importantly, how does it actually get into the fabric of the margins, revenue growth, valuations, and whatnot? Is a big hole there. And this is where I think the numbers that I pulled out here, which are consensus, are probably low because the trend in AI is going beyond generative AI. I think this year the big thing will be in robotics, making the robots actually smarter than humans, not just automation machines. And that trend has started somewhat in 2024. I see it really picking up big time. And that's why I've focused a lot because all the elements are here. Inflation proof, growth proof, AI leader. And so basically, so what I was actually putting here, a couple of tables, why they're inflation resilient, top industries within automation, smart manufacturing, top stocks and ETFs in industrial automation, thematic ETFs here. And then my favorite, because small cap, innovation, industrial automation, and smart manufacturing, these are the stock that I focus on because they're going to have incredible growth and probably like at least 1/3 of this list, in my view, within 12 to 24 months, will be taken over. So this is my probably closest I'll get to giving recommendations on this call would be these stocks here. I follow AI. That's my job. That's what I do. So that is how I came up. That is my journey top down that prepared for today. Am I within 10 minutes, Tyson?
That's perfect.
Okay.
Charles Zhang, you do you have any comments? You run a quantitative strategy, and what is it telling you these days in terms of the markets?
Sure. Yeah, sure. Hi. I want to provide an update to my quantitative strategy. So as of today, there's not that much have been changed compared to a month ago. The portfolio remains almost entirely in cash. My risk management framework is now actively seeking to deploy capital in the current market environment. So to understand why, let's look at historical market correction and bear markets. These times, almost without exception, are characterized by high volatility. And even more importantly, they are incredibly choppy. So we see significant price swings in both ways. Sharp rally followed by equally sharp drops. I have prepared some slides. Here are some historical bear markets. So consider the 1981 to 82 period. This time period shares some striking parallel to our current political and economic context. We had high inflation and a president that's focused on containing inflation. So if we examine the market action then, the key takeaway is the same, high volatility and significant choppiness in both ways. This is a recurrent thing in correction and bear markets. A few more examples. Here is in 1990s. Let's go to the next one. Here is for 2000 to 2001. Here is for 2011 and closer to now. This is the last large bear market in 2022. So now for a risk managed long strategy like mine, which rely on explicit stop losses to protect capital, the current kind of market environment is inherently very hard to do. So my strategy works well in an uptrending market with reasonable choppiness. When volatility becomes excessively high, the cost of those stop losses increases proportionally. So imagine getting stopped out on a downswing only to see market reverse sharply shortly after. So in a choppy market like these whipsaws and cumulative costs of being repeatedly stopped out can erode capital very quickly. Therefore, my current high cash position is a calibrated choice to protect capital and avoid being chopped out in this kind of volatile environment. I'm patiently waiting for 3 key changes in market character that could signal the start of a new bull market and a more favorable environment for my strategy. These signs are, firstly, we need to see the major indices longer-term moving average, like the 20-day, the 50-day, and the 200-day being repaired, meaning price action needs to be consistently trade above this level, indicating a broader strengthening trend. Secondly, we need to observe a reduction in day-to-day volatility on the indices. So a calm and more stable market environment is essential to my strategy. And lastly, historically, new bull markets are often led by new industry groups with new stories. So we need to identify emerging new industry groups demonstrating clear outperformance and leadership. So until we see these key changes happen, my strategy will remain primarily in cash, waiting for the right waiting for the right time. So I want to thank you, everyone, and I'll pass on to Tyson.
Okay, Tony, any thoughts?
Well, first of all, yeah, I think this tariff situation is going to end very badly. And I think by the time we're done, uh, Donald Trump and Herbie Hoover will be compared, and I don't know who's going to get the worst of it. But the idea that, as Trump said in his last telecast, that with these tariffs, the foreign auto companies are going to build plants in America, I think is largely a pipe dream. And what I think is going to happen is that the U.S. is going to become a quote unquote closed economy. The big beneficiary is going to be China and the rest of Asia, and to a secondary extent, Europe. I also think that Europe is going to benefit from the lessening of the fiscal reins that have held it back. I think Europe is going to benefit from the end of the war in Ukraine, which I think is going to happen. I would be very careful. I generally like commodities but I'd be very careful about natural gas because Gazprom is the largest holder of natural gas reserves in the world. And I think with peace in the Ukraine, they're going to come back into the market. If I were President Xi and I could ask for a president in the US and what he would want them to do, I think I'd sketch out Donald Trump because first of all, with the way U.S. aid and all these other things have been terminated, it's just an invitation for China to come in and be the good guys. Now, I don't deny, I think it's perfectly correct that there's a lot of waste in government and a lot of unnecessary corruption, but there's got to be a better way to deal with it. I think that Trump's latest tariff gambit with the car autos is the best thing that could possibly happen to the Chinese because all their competitors are now going to have their supply chain disrupted, which means their costs are going to go up substantially. And not, I mean, as a still owner of BYD, I could say thank you very much. I like gold. I like silver. I think platinum is interesting because as I think it's forming a base. I think Anglo-American platinum is a really interesting stock here because it's going to be divested from the parent And very often these divested orphans do very well. It's a cheap stock, pays 2% dividend, hasn't done anything in this market. So my intention is to buy selected European stocks on or about April 2nd, because I think they'll go down into the tariffs. Two European stocks that I'm looking at into this are Siemens and Santander. I think Schlumberger is really an interesting outlier because, again, the stock has done nothing. And I think they have historically been a big factor in Russia. And the Russian oil fields are going to have a lot of deferred maintenance. And I think Schlumberger is probably going to be a big beneficiary. The stock's very cheap. So, one other one that I've owned for a long time and has been a horror show, but I think is very good value here is Silvercorp Metals, which owns a first-rate, low-cost, high-grade silver deposit in China. The stock got killed because they floated a convert in the stock to develop some projects, and I forget whether it's Colombia or I think Nicaragua. But anyway, the stock lost 80%, 40% of its value 2 weeks after I bought it. But I think it was a good value when I bought it, and it's coming back now, and I think it's a better value now. So that's how, yeah. About the dollar, I can't see. I don't know what happens to the dollar, but I think the problems created by these tariffs is going to be a big problem for the U.S. economy. I think we're going to have probably severe stagflation. That's not good for stocks. It's not good for the dollar. It's very good for gold. I think copper is interesting because I think both Ukraine and Gaza are going to be rebuilt, and that is going to require a lot of copper, among other things. So I like copper here.
What would you own to play copper?
Well, I like Hudbay. And I also what I keep forgetting the name of this thing. Hold on. It's MS in Canada. Sorry, CS. Capstone. If you want one of the blue chips, I'd pick Southern Copper. Indonesia makes me nervous, so I'd stay away from Freeport.
Okay. Thank you. Thank you for your
You're
thoughts. Are you done?
Yep.
Do we have any questions? Oh, Walter Harrison is joining us. Anybody in the audience
I
have any
just
questions?
want to.
Go ahead.
I used to see Walter a lot at the old Brimberg lunches, and I want to say hi, Walter. That's it.
Hold
All
on.
right.
Let me get, here we go. Hi. Good to hear your voice. And now I see you, Anthony.
But
Good.
you don't have that stylish robe that Tony has. Tony's sporting.
Oh, no.
Do you have a lightsaber by any chance, Tony?
A what?
A lightsaber.
Lightsaber. Right.
You know.
I don't even know what it is.
You never saw Star Wars? They
Oh,
fought
yeah,
with
yeah.
lightsabers.
Oh, yes,
Well, they all
yes,
had big
yeah.
capes
Okay.
like that.
Okay.
So I'm not sure whether it sounds like you missed most of this meeting, but if you have any thoughts, go ahead. And anyone else who has any questions, fire away.
Well, I'm sorry to have missed the whole meeting.
Well, we're sorry you did, and we don't have enough time to repeat it for you. But what are your thoughts on gold these days and gold stocks?
Well, I think if you like gold, then you probably ought to love gold stocks because usually they trade at much more of a premium to where gold is trading. And I think, I don't know what the hell's going to happen to gold. I've been in gold since the ETF came out. It took me a number of years to realize that gold is the only money, and that finally, sometime in the early '90s, I realized that. And when the ETF came out, gold was at 400 and GLD was at 400, and I bought my first GLD at 44. And to me, it's an important hedge in the portfolio. I always worry about things getting so screwed up the way they were, in Weimar Germany, or even for the most part during the Big Depression. And the concept would be that if you have 5 or 10% of gold in your portfolio, even if the world goes to hell, you'll probably end up with at least an equal percentage as you would have had without it, if you were just in stocks and the stocks never got destroyed. But of course, the problem with GLDs are that if it gets really bad, it'll be tough. In theory, we should all be eventually exchanging it for real gold, intangible stuff, but I haven't done that. Now, PHYS, you can actually, after you buy, I don't know how much it's not that much, but after you buy the PHYS, you may then turn it in for gold and they will ship you the gold. They'll charge you for shipping it and you'll have to maintain it someplace. But so once I learned that, I started buying the PHYS.
All right. I'm not sure whether actually we do have one person. Larry Chiarello asked about any views on crypto. I kind of got attracted to it in this past fall, and I'm surprised that with the Trump administration's support, that it hasn't continued to do tremendously well. I'm always one of the great professors out of NYU, Aswath Damodaran, who's a real value guy, said, "Well, I don't understand crypto, but I know when the market goes down, it goes down too," and that may be exactly what's going on. But Richard Barsom, you do know something about crypto. Do you have any thoughts on that? You're on mute, so if you're going to speak, if you're still on the call. Anybody else, any thoughts on crypto?
Well, I think, look, I'm on two minds of it, and I don't have an opinion, a net opinion. But I think the two problems with it. One is that it you keep it keeps getting hacked, and if that's a real risk. Now the more important issue I have with it is that fundamentally, if crypto gets wildly adopted, paper currencies become obsolete, and no government in the world wants to be limited in its spending. So I think that in the long term, cryptocurrencies and regular currencies have a huge there's a conflict there, and I mean, I would have thought that cryptocurrencies would have been clamped down on just the way national bank currencies were years ago, but that hasn't happened. And I think the reason it hasn't happened is because it's so very profitable to the people who trade in it and some of the people who own it. So I don't know where that gets us, but and probably because I'm 82 and a half years old, I just as soon have gold.
All right, I have a question.
Creating generational wealth, and it creates an income stream for the beneficiaries as well. So I think diversifying into real estate assets is a good, smart move. And those are considered alternative assets. And there's a lot of move towards owning alternative assets by endowments from Yale, Harvard, from retirement funds, from sovereign wealth funds. So there is a move towards owning alternative assets by majority of the major investors in the world. So in the US, if you own real estate, that's definitely a great move. And for investors who have more money and be able to take risk, then they can go abroad, in emerging economies like China, India. I mean, India is great because of the huge population and 6-7% growth rates. So I think that's my take on real estate.
Thank you. I agree. I've been leery of real estate, and I think it's very interest rate sensitive. And given the backdrop of a significant decline over the last 40 odd years of interest rates, real estate was the go-to alternative asset. And I think some of it's pricey and some of it's, there are probably interesting areas where you want to invest. I'd probably think that investing up in British Columbia, if there's a gold revival and mining up there, maybe that would be ahead of the curve. But Rich Barsom, do you have any comments? Somebody was asking about crypto. Do you have any thoughts on that?
Yeah, I mean,
Yeah, I think it's I think a lot of people are missing out, and I think that I think a lot of people aren't understanding that it is really, I think it's the thing driving inflation. I mean, as a career, I'm involved in the OTC, and that's now been replaced. So the decentralized exchanges and cryptocurrencies have completely replaced all these sort of new ideas that we used to have. The OTC is dead, and it's just night and day. I'll give you an example. To raise a couple $1 million in crypto is literally will cost you $50,000. To raise a couple million in the OTC, $500,000.
Interesting.
Yeah,
So
and the difference is with the OTC, you usually get sued or some sort of scam happens. With crypto, everything's on the blockchain, so it's virtually impossible to get ripped off.
okay, last question, Sid, and then we'll wrap it up.
Yeah. I had a comment on crypto. Look, it's not a fiat currency. It's not issued by any government. It has no intrinsic economic value. It's not backed by gold or any asset. So essentially, the people who are issuing these cryptocurrencies are getting rich. Uh, and if the governments find that it's threatening their fiat currencies, their paper currencies, it will take them merely a second to shut them down. All they will need to do is to issue an order. SEC comes in, issues an order that all cryptocurrencies are illegal. China comes in, they say all cryptocurrencies are illegal. There you go. I mean, so I just don't understand what people have in mind. It's almost like the tulip mania. That
I agree in somewhat. Excuse me, I don't want to interrupt, but I agree in some way that it is like tulip, and I think I don't know which cryptocurrencies you're talking about. I think if you're talking about in general, I think that 10 years ago that might have been the case, but I just don't see that happening. I don't think the U.S. government could fix a fucking stop sign, let alone
By the way, Richard,
let alone police cryptocurrency. But anyways, look, what you are right. There is a very small portion of crypto right now which is completely tulip, and the utility isn't there, and I agree. But to say that they can say, okay, it's illegal and this, that, I mean, I'm not sure are you familiar with what's going on with the current administration? I mean, they're looking into doing things that are, really different. I really don't know. So I don't want to say to people, oh, it's safe, because you could be right. They could come and try to, stop it, make it illegal. But again, my thing is, you know, I mean,
well, I mean, look,
look at their history. I mean, remember Solomon Brothers? Remember '08? I mean, come on. So I think that in the general sense, the macro sense, I think that it I think that it's causing inflation. I think people just don't understand. I mean, because they think of it as like, oh, it's a scam. It's just what it's really doing is it's creating a ridiculous amount of money for these young people, and you can see that in what's happening. You can see the speculative nature of our country. I mean, that's just look at real
well,
estate.
Richard,
final response, Sid, and then we're done.
yeah. So, Richard, I really think that if somebody wants to trade in crypto, they would do well or equally well by going to Las Vegas and spinning the wheels. And look, why would anybody in their right mind want to trade crypto when there's thousands and thousands of stocks in the US, around the world, ETFs, so many different opportunities? Why would somebody want to invest in a cryptocurrency which has no backing, no intrinsic value, and not only that, it facilitates criminal activity by people looking to do, transactions which are untraceable, number one, and it gives pariah countries like Russia or Iran or any of these countries to fund their operations around the world. So it actually hurts U.S. and the Western world in terms of these countries being able to carry terrorist attacks against us. So I just don't understand why. Look, Trump, maybe, look, the guy is not in the right mind. I have no idea, what.
Well,
Well,
Trump,
But so he will do whatever he wants. But
well, can I make a comment on? Can I make a
Yes,
comment
go ahead.
on
Yes, sir.
crypto? Well, first of all,
Maybe
the
you
good
might be
thing
right. I don't know.
the,
Go ahead, Mitch.
It
the good
Trump
thing
can be
about the
upsetting, Kenny.
the good thing about the Trump administration for pro crypto is that he's pro crypto. But I think that could be misleading because when a president of the free leader of the free countries in the world issues a crypto for his own benefit, then you got to ask your question. Maybe Trump is imagining that he can become richer than Elon Musk through crypto. Technically, he might have that in mind because all this pro crypto and administration really fell through, in my view, once he issued a crypto. Then it was like, okay, let's get quick rich, and then after we'll shut it down once we make the money. So I agree on that part. And this whole Trump pro crypto is absolute BS.
I'm gonna try to wrap things up here. We've been on for an hour and 6 minutes. Michael Saylor makes a compelling case for Bitcoin. But on the other hand, there is a compelling case by some, like Jamie Dimon, believe it's dirty. It supports criminal activity, and it's a Ponzi scheme, or
No, hold on a second. Just
Okay,
to make things sure. You're all talking general crypto, and in general, you're right. There is crypto that actually have functions, very good functions. In fact, DeepSeek was created on the base of one of the cryptos blockchains that has a function. So in general, you're right. But if you want to dig in deep, I think you better do some research because there are some cryptos that make sense, but they're not high flyers. And they're still not going to make Trump, they're still not going to stop Trump from being the richest man in the world or a lot of issuers making money and then running away with it.
Thank you, everybody, for joining today.
thank you.
Thank you.
We'll meet again
Thanks,
next month.
guys. Great call.
Bye.
Thank you. Yeah.
Thank you.
Awesome.
Bye-bye.
How do I get off this thing?